police retrenchment, citing procedural infringements. Economic challenges in South Africa, alongside strained trade relations, has contributed to multinational corporation, the corporation scaling back operations in the region. Still in Africa, and now Kenya. Kenya Airways has finally paid the sanction fee imposed by the Nigerian Civil Aviation Authority after a prolonged dispute over consumer rights violation, including high-profile case of Nigerian passenger Gloria Omisore. The airline settled the penalty on Wednesday, September 17, 2025, 6 months after the sanction was announced. The development was confirmed by NCAA's Director of Public Affairs and Consumer Protection, Michael Achimogu, who announced the payment in a statement and also on his official X handle. According to him, the settlement followed a series of meetings involving the Kenyan High Commissioner to Nigeria, officials from Jomo Kenyatta International Airport, and representatives of Kenya Airways. The sanction traces back to an incident in February 2025 when Gloria Omisore, a Nigerian passenger, accused Kenya Airways of mishandling her travel arrangements. Omisore, who was on a return trip to Manchester via Paris, was denied a boarding at Nairobi's Jomo Kenyatta International Airport on the grounds that she lacked a Schengen transit visa. The situation escalated because, according to Omisore, the airline had earlier assured her that no such visa was required for her itinerary. The denial left her stranded in Nairobi for 17 hours, followed by an additional 10-hour delay on an alternative London route offered by the airline. Frustrated, exhausted, and reportedly in need of care, Omisore requested accommodation and medical assistance. Kenya Airways, however, declined her request, insisting that her passengers denied boarding for visa-related reasons were not entitled to such provisions. The standoff culminated in a confrontation at a transfer deck captured on video, in which Omisore allegedly threw used sanitary pads at airline staff. The incident quickly drew attention in Nigeria, sparking public outcry and prompting the NCAA to launch an investigation. Following its probe, the NCAA concluded that Kenya Airways had breached consumer protection regulations and misled the public in its initial statement. On May 7, 2025, the regulator announced a series of penalties against the airline. The sanction included a 3 million naira fine on Kenya Airways, compensation of 1,000 special drawing rights for each of the 3 affected passengers, including Omisore, and a requirement for a public apology to the passengers. Still in Nigeria, Nigerian farmers have been urged to reduce their reliance on antibiotics in livestock production in order to promote healthier animals and safeguard the environment. The call was made by Habib Tajuddin, a Nigerian animal nutritionist, who emphasized the importance of aligning animal nutrition with environmental sustainability. Tajuddin highlighted that the future of animal farming cannot continue to depend on antibiotics, and noting the urgent need to maintain food security without exacerbating the global threat of antimicrobial resistance. He pointed to alternatives such as black soldier fly meal and oil, which can serve as substitute for soybeans and tallow. Tajuddin further stressed the practical benefits of multi-enzyme blends such as phytase and protease, which have shown significant improvement in nutrient digestibility and feed cost reduction for non-ruminant animals. Still in Nigeria, a manufacturing import bill widens a 14 trillion naira trade deficit. But we'll talk about this after this time out. Let's go on a quick break, and when we're back, we'll continue Business 360 looking at highlights and what the manufacturing sector is all about. Don't go anywhere. Welcome back. Still looking at the manufacturing sector in Nigeria as manufacturing import bill widens 14 trillion naira trade deficit. Nigeria's manufacturing sector has sunk deeper into deficit as imports of manufactured goods outpace export by more than 14 trillion naira in the first half of 2025. The latest data from the National Bureau of Statistics (NBS) highlights the scale of the country's industrial crisis and reinforces calls for urgent government action to reverse the trend. According to the NBS, the value of manufactured goods imported between January and June stood at 15.39 trillion naira, while exports during the same period amounted to just 1.09 trillion naira. This created a deficit of 14.3 trillion naira in only 6 months, continuing a long-standing imbalance that underscores Nigeria's reliance on foreign products. Although exports rebounded in the second quarter, rising to 803.81 billion naira, up 173% from the first quarter and 67.17% year-on-year, industry players warn that the growth is insufficient to offset the flood of imports. The Director General of Manufacturers Association of Nigeria, Segun Ajayi Kada, described the figures as a troubling confirmation of what manufacturers have repeatedly warned about. Still in Nigeria, the Executive Secretary of the Nigerian Content Development and Monitoring Board, NCDMB, Felix Ogbe, has urged leading Nigerian oil and gas service providers to channel their expertise into the deep water segment of the industry, where significant opportunities are opening up. Ogbe met the call during an inspection tour of West African Ventures Nigeria's Limited, a fabrication yard, machine, shop and jetties at the Federal Ocean Terminal in One, River State. The agency board said the firm and other established indigenous companies must look beyond traditional onshore and shallow waters operation and position themselves for the deep water space where global oil majors are steadily moving their activities. Meanwhile, Bombardier hails Dangote Refinery as global game changer. Canadian aerospace giant Bombardier Incorporated has endorsed the Dangote Petroleum Refinery, describing it as a world-class facility with the potential to reshape Africa's energy landscape and transform the global aviation industry. Leading a high-profile delegation to the refinery, a chairman of Bombardier Board of Directors, Pere Boudin, said he was struck by the scale, technology and vision behind the world's single-train refinery, the world's largest single-train refinery. He noted that the facility's capacity to produce jet fuel is in large volume while meeting stringent environmental standards represents a breakthrough for aviation. Boudin was accompanied by Regional Vice President Hani Haddadin and Chris Davey, as well as Corporate Director John Mbania. The delegation praised Dangote Group President Aliko Dangote for his foresight in executing what Boudin described as the best refinery project in the world. Meanwhile, the federal government may issue a 758 billion naira bond before the first week of October to clear outstanding pension liabilities. The National Pension Commission has disclosed this. Speaking at a press briefing in Abuja on Thursday, the Director of Contribution and Bond Redemption Department at PENCOM, Usman Musa, explained that the process had already begun and was moving quickly following the approvals of the Federal Executive Council at the National Assembly. In her address, the Director General of PENCOM, Omolola Olowararin, said the inauguration of the Pension Industry Leadership Council marked a historic milestone for the pension industry. She explained that the council was designed to provide collective leadership and coordination, similar to the Bankers Committee in the financial systems. And now to global economic standings and the market. Let's begin with the Bank of Japan as a hold rates and begin selling of certain funds. The Bank of Japan kept its benchmark short-term rate at 0.5%, maintaining borrowing costs at the highest level since 2008 and in line with forecasts. The decision passed by a 7-2 vote came amid risks over Japan's political outlook and the impact of U.S. tariffs. The Bank of Japan also announced it would begin selling its holdings of exchange-traded funds and real estate investment trusts. Still in Japan, looking at Japan's inflation as it hit 10-month low. Japan's annual inflation rate eased to 2.7% in August 2025 from 3.1% in the previous month, marking the lowest reading since October 2024. Electricity prices fell much steeper due to government subsidies, and gas prices dropped to -2.7% after being flat previously. Education costs also continued to drop, and price growth slowed for household items, healthcare, and recreation. Inflation accelerated for housing, clothing, transport, communication, and miscellaneous goods. On the food side, prices rose 7.2%, easing from July's 5-month peak of 7.6%, driven by the smallest gain in rice prices in 8 months at 69.7%, amid Tokyo's effort to curb stable food costs. And now let's look at the charts indicating Japan's inflation rates. The chart indicating Japan's inflation rate and the indices that comes with it. There have been ups and downs regarding inflation in Japan. Previously standing about 3% in August. Inflation began to slow down August last year, slowed down to 2.3% low in October in a period of 1 year. After getting to another peak of 4% in January, it's been a continuous slowdown in inflation rate, which indicates the cost of commodities as well as the strength of the Japanese yen, and the price level going as low as 2.7% in August. And now to commodity market as palm oil wraps up week on subdued tone. Malaysian palm oil futures edged higher, hovering near 4,450 Malaysian ringgit per ton, reversing losses from the previous session. Support came from weaker ringgit and gains in rival soy oil on the Dalian and Chicago exchanges. Meanwhile, the Malaysian Palm Oil Board announced that the October crude palm oil reference price will keep the export duty at 10%. On the demand side, purchases from top buyer India are expected to remain firm ahead of the mid-October festive season. In August, India's palm oil imports jumped 15.8% to 990,528 tons, the highest in over a year, as attractive pricing versus soy oil encouraged refiners to stock up. An industry association in India projected imports above 800,000 tons this month. For the week, contracts were little changed, staying subdued amid recent holidays. And now to the markets. Let's look at the price of agricultural commodities, afterwards the metal market and energy markets. The agricultural market. Agricultural market indicates the price of soybeans at $1,042 per bushel, extending gains, but on a weekly basis it's been a decline. Today is Friday, the last trading day of the week, and soybeans price had dropped on a weekly basis at -0.27%. A wheat price at $523 per bushel, falling 0.91 point today, but on the weekly basis also on the negative. Lumber price gaining 6 points today, 1.15%, gaining on a weekly basis 0.35%. And palm oil dropping 15 points at 4,419 Malaysian ringgit per ton, falling -0.34% on a weekly basis and -0.58%. And now to the metals. A metal commodity beginning with price of gold, and gold price at $3,658 per ounce, gaining 14 points, 0.39%, a weekly gaining 0.41%, a silver price also gaining on a weekly point, gaining 0.16%, copper price falling on a weekly basis, a -0.63% at $4.55 per pound. And steel price gaining on a weekly basis 1.61%, but gaining 18 points today at a price level of 3,095 Chinese yuan per ton. And now to the energy markets. Energy commodities indicates the price of US crude oil at $62 per barrel, falling this morning by 0.683 points, -1.07%. Weekly basis is again. Brent, which represents Nigeria's price benchmark at $67 per bushel, dropping 0.44 points, a negative 0.65% on a weekly basis. No significant change, just 0.01% again. And now to further markets, the financial markets, as Naira records second straight depreciation against US dollar. The Nigerian Naira recorded a second consecutive depreciation against the dollar at official foreign exchange market on Thursday. The Central Bank of Nigeria's data showed that the Naira dropped further to 1,498 Naira and 98 kobo per dollar on Thursday, down from 1,494 Naira at 3 kobo traded on Wednesday. This means that the Naira weakened by 4 Naira 45 kobo on a day-to-day basis. In the last 2 days, the Naira has dipped by 14 Naira 84 kobo against the dollar and foreign currencies. Meanwhile, at the black market, the Naira remains stable at 1,537 Naira per dollar on Thursday, the same rate exchanged on Wednesday. This comes at a time when the country's external reserves continue to rise, standing at $41.95 billion as of September 17, 2025. Quickly to the market, a US dollar against the Naira, and afterwards we'll look at FX update. A US dollar against the Naira. A US dollar against the Naira price level stands at 1,500 Naira to the US dollar, and the Naira gaining 5.4 points. Rather, the dollar gaining 5.47 points, a 0.37 percentage gain, but on a weekly basis, the dollar struggled against the Naira, negative 0.1%. The US dollar against the South African Rand, 17 Rand equaling 1 US dollar, the dollar gaining not too significant on a weekly basis, struggle against the South African Rand. And against the Zambian Kwacha, the dollar also gaining by 0.57% at a price level of 23 Zambian Kwacha to the dollar. And the US dollar against the Egyptian pound, price level standing at 48 pounds to the US dollar. Not much of a significant change on a weekly basis for the dollar, but a slight gain this morning, 0.1% gain for the dollar against the Egyptian pound. As we set to close, let's look at further currencies in the market and as a price of FX update. Looking at the top currency losers, South Korean won, a negative 0.47%, New Zealand dollar, negative 0.3%, Turkish lira, negative 0.3%, and the euro, a negative 0.11%, a British pound, a negative 0.06%, and the dollar index, a negative 0.01% this morning. Gains are led by Japanese yen, 0.33%. Quickly, now let's look at the cryptocurrency market. As you can see, the price of Bitcoin is 116,975 US dollar. A Bitcoin falling by 179 points, negative 0.15% on a weekly basis. It's been a gain for Bitcoin, 0.75%. Ether also falling. Binance gaining 16 points. Cardano falling slightly. Solana falling. That of mixed fortune for cryptocurrency market, and similarly mixed fortune on a closure of the week. Well, there's so much we can take when it has to do with the world of business. And here we draw the curtain on today's edition of Business 360. Thank you for being a part of it. My name is Blyden Lukem, and thank you for watching.